Welcome back, everyone, to another explainer. Today, we're diving into a genuinely fascinating piece of trading tech, QuantGem's option chain analyzer and Gamma Blast. Now, if you trade Indian index options, stuff like Nifty and Bank Nifty, you already know the market moves incredibly fast. So I want you to think of this indicator not just as some basic tool, but literally as a high-performance engine for your trading. We're going to pop the hood, look inside, and see exactly how it processes live option chain activity to give you a definitive edge. Let's get into it.
Okay, let's dive right into our roadmap for today. We've got 6 parts: the confluence question, reading the flow oscillator, triggering a gamma blast, the signal logic explained, step-by-step intraday workflow, and finally, the trader's playbook.
All right, section 1, the confluence question, moving beyond up or down.
To really wrap our heads around this system, we need a massive mindset shift. I mean, let's be honest, most traders just stare at a chart, guess the market direction, and frankly, pray. But this engine, it demands deep structural alignment. You have to ask yourself, is the price actually moving? Is VWAP confirming? Is the adaptive trend confirming? Is the option chain confirming? And crucially, is gamma activity expanding at the exact same time? True confluence isn't just some simple moving average crossover. It's when the underlying price structure and those invisible under-the-hood mechanics of the option chain lock into perfect, absolute agreement.
Moving on to section 2. Reading the flow oscillator, the engine's momentum.
So, the flow oscillator sits right there below your price chart, and what it's doing is constantly converting live option chain activity into a super clear directional score. And what's really interesting here is how perfectly these zones map out market momentum. The 0 line, that's your neutral territory, your baseline. But look at the plus 68 and minus 68 levels. These are the strong zones, bullish and bearish. When you're in these zones, the participation is aggressive, so you're going to want to buy pullbacks or sell bounces. But as you push out to the extremes, like the plus 96 or minus 96 levels, the engine is basically redlining. The momentum is huge, but it's really stretched. That's exactly when you need to trail your stops and definitely avoid chasing late entries. It's just a brilliant way to visually gauge option chain pressure.
Now, the indicator actually gives you 2 different ways to read this flow. The old approach casts this really wide net around the at-the-money area to gauge the broad mood of the market. And honestly, it's kind of like using dial-up internet. For most intraday traders, it's just way too slow. Dynamic analysis, on the other hand, is the absolutely necessary preferred setting here. It lasers in on the most sensitive near ATM strikes, the ones that respond the fastest to price movement and gamma changes. This is exactly how you catch that rapid intraday momentum.
Section 3, triggering a gamma blast, the engine's acceleration.
Okay, so if the flow oscillator is our engine's momentum, the gamma blast is the literal turbocharger that violently accelerates the entire system. But what exactly is it? Well, it detects the exact moments when ATM option gamma activity expands sharply. To put it simply, it's when the options market suddenly becomes hypersensitive to the underlying price. Just a tiny twitch in the index creates a massive, super fast move in the option premium. And here's the absolute key design choice you've got to understand. Ordinary, everyday option chain bullishness just isn't enough to trigger this. You need flow plus that gamma acceleration to fire off a real signal.
And the thing is, these violent blasts don't just happen at random. They cluster around some very specific market events. You're going to see them during intraday breakouts, or the exact second a market explodes out of a consolidation range. You'll definitely see them during those notoriously sharp expiry day moves, and especially during stop-loss cascades. Those aggressive short covering or long unwinding phases. When the gamma blast fires during these moments, it's telling you the market is completely stepping on the gas.
Section 4. The signal logic explained. Assembling the gears.
All right, now it's time to actually assemble these gears and see how a high probability trade signal is generated. And this brilliantly illustrates the contrast we're looking for. For a long signal to fire, the engine demands complete, 100% alignment. Price has to be above VWAP and the adaptive trend, the option flow has to be bullish, and ATM gamma expansion must be active. It is the ultimate momentum long setup. Now, for a short signal, it's the exact mirror opposite. Price below VWAP and trend, bearish flow, and active gamma expansion. The system absolutely insists on structural harmony, no exceptions.
Section 5. Step-by-step intraday workflow, theory to practice.
So, how do you actually run this engine live during a real trading session? Well, here is your step-by-step checklist. Step 1. Configure it accurately. Seriously, if your expiry date or ATM reference is wrong, the engine is just feeding on bad data. Step 2, read your oscillator bias first so you actually know if you should be hunting for longs or shorts. Step 3, watch those zero-line crosses for potential intraday shifts. And step 4, well, honestly, this is the most crucial part of the whole thing. Use signal dots as confirmation, not prediction. Never, ever use a signal dot as a standalone hot tip without verifying your structural alignment first.
Section 6. The Trader's Playbook. Rules of Engagement.
As we all know, markets change every single day, right? So we have to adapt our rules to match the current environment. On trend days, the playbook is incredibly clean. On a bullish trend day, the price is holding above VWAP, the oscillator is sitting above zero, and your job is to hunt for longs on the dips. Do not short just because the price looks quote-unquote overbought. It's a trap. Conversely, on a bearish trend day, everything is pinned below VWAP and zero. You prefer shorts, you use bounces to enter, and you absolutely do not buy just because the market feels oversold. Always follow the structure.
But what about when the market is just an absolute mess? On range-bound days, the oscillator is just going to chop back and forth across the zero line, and price will keep crossing VWAP over and over. The golden rule here? Drastically reduce your trade frequency and your size. You literally have to sit on your hands and wait patiently for a decisive zero-line expansion before committing any real capital.
Now, expiry days, they are a completely different beast. Because gamma sensitivity is at its absolute highest, these days can be incredibly profitable. But man, they are also full of noise. You need strict, non-negotiable rules here. Only take signals that are flawlessly aligned with both VWAP and the adaptive trend. Avoid trades when the oscillator is flat near zero. Definitely, do not chase after a vertical move that has already taken off. You want to book your profits faster and always use hard stops.
Okay, let's do a rapid-fire check of what not to do, because protecting your capital is the name of the game here. Do not just click buy because a green dot appears on your screen. Do not get lazy with your expiry settings. Do not trade illiquid option chains where the data is just pure trash. Do not blindly chase extreme oscillator readings without actually checking price extension. And most importantly, do not ignore VWAP and adaptive trend alignment. Just don't do it. Ever.
Listen, if you take absolutely nothing else away from this entire explainer, please internalize this one quote right here. It's the core philosophy of the whole engine. Trade long signals only when price structure is bullish, short signals only when structure is bearish, and treat everything else as a no-trade condition. That is the secret sauce right there.
We've covered a ton of ground today, taking a highly sophisticated tool and breaking it down into logical, actionable steps. So I'm going to leave you with this one thought. Are you ready to stop guessing at price direction and start trading with true, undeniable structural confluence? The option chain is speaking to you. You just need to know how to listen. Thanks so much for joining me on this explainer, and keep learning.